Hello, and thank you for joining. I'm Financial Ernie, and I want to talk to you about two new SEC filings that Mullen Automotive just put in during after hours today. First one of which is going to be the 10K filing extension, followed by an 8K disclosure in terms of a new lawsuit that Mark Basil and his firm just submitted as of yesterday, and the filing came out today. So jumping into Form 12B25, this is the 10K extension form that has to be filled out. Basically, I wanted to highlight just a couple things, just high level. The reason for which you would need the extension needs to be fully explained. So if you go down to Part 3, which is called the narrative, you'll see that Mullen is in process of completing valuations related to the assets acquired from Bollinger and Elms, and that they will have this form 10K complete within the extension period provided under Rule 12B25 of the Security Exchange Act. Outside of that, one other thing I did want to mention, if you look on the right hand side under bullet 3, they did check the yes box, and then if so, attach an explanation of the anticipated change. It has to be both narratively and quantitatively. I wanted to go ahead and jump down to the next section. It says the change in asset valuation will have no impact on the cash position or cash utilization of the company. So regardless of how the finances, the financial assets are finally evaluated, it's not changing anything in terms of the cash position or utilization. So that's good, but in order for the accounting team to be able to finish up this 10K, they do need to get the evaluation complete. So that is a justification for needing this extension. All right, and in terms of the 8K, you can see that the lawsuit was actually filed on December 28th in the Southern District of New York, alleging that GEM Global Yield LLC, SCS, and GEM Yield Bahamas Limited, as well as Christopher F. Brown, engaged in unlawful security transactions with the company. They did so as an unregistered dealer under the U.S. security laws. So the actual complaint itself is Exhibit 99.1. You can see it's hyperlinked down at the bottom. So if you're inside one of these SEC filings, look for those hyperlinks. That's going to get you to a little bit more of the details. But before we get into that exhibit, I did want to touch base on the GEM relations with Mullen Automotive. So going through some of the previous 10Ks, I was able to extrapolate out a little bit about those deals as well as some of the litigation and arbitration that was involved. So follow along, you'll see the different colors I've highlighted as we go through these different legal documents. We'll go ahead and jump at the top. So January 4th, 2021, MTI, which is Mullen Technologies Inc., entered into a $350 million equity line financing agreement with GEM Global and GEM Yield Bahamas Limited. And that is an aggregate value of $350 million. If the aggregate limit has been reached, the purchaser will increase the aggregate limit in an amount up to $150 million. The agreement matures in 36 months after the public listing of MAI common shares. Further, the GM agreement, we are obligated to issue warrants providing GM the right to purchase up to 6.6% of our common shares outstanding on the public list date. As the company is not affecting a reverse merger transaction, nor is the company affecting a direct listing of its common shares, the company does not believe it is obligated under the GEM agreement to pay fees nor issue warrants to GEM. In addition, the company has agreed with the lender of its convertible promissory notes that the company would not, I repeat, not initiate utilization of the GEM agreement. So if there's any kind of confusion behind this, this SPA, Mullen never received any money from GEM, nor did they purchase any warrants or anything of that nature. So going down a little bit further, note 18, contingencies and claims. The company did not effect a reverse merger transaction as defined in the GEM agreement, nor did the company effect direct listing of common shares. The company does not believe it's an obligation to pay fees nor issue warrants to GM under that agreement. Companies agreed with a lender of its convertible promissory notes that they would not initiate utilization of the GM agreement. Based upon information presently known to management, the company believes that the potential liability will not have a material adverse effect on its financial condition, cash flows, or results of operations. Therefore, no liability has been reflected on the condensed consolidated financial statements. So moving a little bit into the future, you'll see September 21st, 21, GEM Group filed an arbitration demand and statement of claim against Mullen seeking declaratory relief and damages. They are saying that this matter is an alleged breach, so not proven, just alleged, of security purchase agreement dated November 13th, 2020. And on June 7th, 2023, the arbitrator held oral argument on issues related to liability. And then going down a little bit further, August 3rd, 2023, the arbitrator issued his decision and order on application for interim measures requiring, and here it is at the bottom in green, Mullen to deposit $7 million into an interest-bearing escrow account with a commercial bank or brokerage firm within 30 days of decision and order. All interest earned on the escrow account shall become property of the party determined by the arbitration to be the principal, and the amounts held in escrow shall only be released upon further order of the arbitrator, a court of competent jurisdiction, or by agreement of the parties. So that's a little bit of background of exactly why the lawsuit needed to be launched. There was some arbitration, some disagreements in terms of this SPA. All right, let's get into Exhibit 99. This is the actual lawsuit information that was shared today. So Mullen Technologies Inc., Mullen Automotive Inc., they're the plaintiffs. The defendants are GEM Global Yield, GEM Yield Bahamas, and Christopher F. Brown. You'll find out more about that guy as we go along. Just to kind of get into the intro here, the GM defendants are unregistered security dealers that purchase securities directly from issuers and promptly, if not immediately, sell those securities, despite failing to comply with Securities and Exchange Act 1934, which voids such transactions under 15 U.S.C. 78 CCB. Going into the next section, GM defendants hold themselves out to be legally authorized to enter into those transactions, such as warrants, subject to this litigation, despite failing to register as a dealer with the U.S. Securities and Exchange Commission, and despite the fact that the Act strictly prohibits unregistered securities dealers from effecting transactions in securities. And then, just to state it simply, GM defendants' business model is illegal. Unregistered security dealers like GM defendants avoid registering so they can evade regulatory oversight and enter into security contracts, such as share price agreements and warrants that generate outrageous and unlawful profits. All right, so to go a little bit into the discussion we already talked about in terms of the SPA, so we'll kind of skip that section. Going down to Section 5, the warrant in this case is unlawful because it was made in violation of Sections 15A of the Act. Going into Section 6, Defendant Brown is in violation of Section 20A. He is the control person for the GM defendants. He authorizes, controls, directs the GM defendants to engage and transact in securities without effective registration as dealers. Going up to Section 20 at the top right of your screen, you're going to see that, and this emphasis is added here in bold, every contract made in violation of any provision of this chapter or any rule or regulation thereunder, and every contract shall be void, highlighted yellow, regards the right of any person who in violation of such provision, rule, or regulation shall have made or engaged in the performance of such contract. So going into the next section, we're talking factual allegations. So this gives you a little bit of the background of GM and how they operate as a business. So their business model is violating federal security laws by operating as unregistered dealers. They have engaged in a multitude of security transactions over the past 5 years. As of 2019, GM Global has effected at least 26 security transactions with at least 18 different issuers, purchased common stock, exercised warrants in no fewer than 117,957,157 shares of newly issued common stock that GM globally subsequently sold on the public market for substantial profit. Section 25, as of 2019, this is GM Bahamas. So 24 was GM Global, 25 is GM Bahamas. So Bahamas has effected at least 41 security transactions with at least 31 different issuers and has purchased common stock and exercised warrants into no fewer than 64,629,867 shares of newly issued common stock that GM Bahamas subsequently sold on the secondary market for substantial profit. So section 27 actually talks about in the last 6 months alone, GM defendants affected at least 4 separate security transactions with at least 4 public company issuers. So you can see the names here. Sufer Air Mobility, 4 million common shares. Alpha Tech Corp, 1.7 million 884 common shares. And NRX Pharmaceuticals, 675,000 common shares. Last one is Jet AI Inc. for 2,179,447 common shares. The reason why I kind of wanted to highlight this and break it out a little bit is just wanted to show you over the past 6 months what the market cap looks like for these 4 companies. So I kind of have them highlighted in the different colors to kind of match section 27. But you can see that 3 out of the 4 of these companies, their market cap was eroded and it still hasn't recovered. The only one that actually showed somewhat of recovery would be the NRX Pharmaceutical market cap. But if you look at their company, they only had a little over 500,000 common shares impacted, where these other companies had significantly more. Also, I haven't fully investigated each one of these companies, looking through their specific PRs and filings to see what other activities or SPAs may be involved. But I just thought it was interesting information I wanted to share. Hey guys, there's only 2 more slides left. I know there's a lot of content in here. Bear with me as we keep going through. So section 28, GM defendants acquire large volumes of shares directly from issuers at a discount to prevailing market prices, then rapidly sell the newly acquired shares back into the open market in order to lock in profits generated from the spread between their discounted acquisition price and the prevailing market price, rather than realizing profits from an appreciation of the securities market price. The GM defendants sell newly acquired securities absent investment intent. Section 30, GM defendants made use of the mails, email, and other instrumentalities of interstate commerce to effect the security transactions, using the internet to solicit issuers, transferring cash through wire transfers, using email, telephone communications to negotiate and effectuate sale transactions through their brokers. 31, GEM defendants paid several independent contractors to assist them in locating, negotiating, and managing the GM defendants transactions. 32, failing to comply with the dealer registration requirements and federal securities law, GM defendants purposely operated under the radar to avoid important regulatory obligations that govern dealer conduct in the marketplace, submitting to regulatory inspections and oversight, following financial responsibility rules, and maintaining books and records. Section 33, any person engaged in the business of buying and selling securities for such person's own account, through a broker or otherwise, as part of a regular business, must register as a dealer with the SEC, or, in the case of a natural person, associate with a registered dealer. 34, while the GM defendants engaged in this conduct, they were not registered with the SEC as dealers or associated with dealers registered with the SEC. Going into the next section here, this is considered part 2. GM defendants business model applied to plaintiffs. Defendants purchased the warrants from MTI. So the section 37, sorry. GM defendants business model reflected conduct, numerous substantial characteristics of dealer activity consistent with ongoing SEC civil prosecutions and federal court decisions. 38, GM defendants acquire securities directly from an issuer through warrant exercises for their own account. 39, the warrant in this case is a security, and therefore the GM defendant's acquisition of the warrant is a transaction in securities. 42, just so you're aware, what they're trying to do is they're basically putting that information and showing that they are actually acting as they are basically transacting these securities, and they're doing so as a non-registered entity with the SEC, and they are not using any associated dealers that are registered with the SEC. 39, warrant in this case is a security, and therefore the GM defendant's acquisition of the warrant is a transaction in securities. 42, the required GM defendants to purchase MTI's common shares from time to time upon MTI's delivery of drawdown notices. The aggregate limit was initially at 350 million. Provision for MTI increased the aggregate limit to 500 million. That's that extra 150 million. 43, GM defendants were to receive a commitment fee of 2% of the aggregate limit payable on the anniversary of the first trading day after MTI became publicly traded, either through initial public offering or reverse merger transaction. Warrant, which entitled GM defendants to purchase shares valued at 6.6% of MTI's public shares on a fully diluted basis at an exercise price equal to the lesser of the closing bid price. 44, GM defendants effected the warrant as an unregistered dealer, utilized the means of interstate commerce in connection therewith. The warrant was unlawful when made. All right, thank you all for sticking with me. This is the last slide. Let's go ahead and get right in it. Section 3 talks about Brown control of the GM defendants' business operations. Brown served as the manager of GM defendants. He possessed and exercised control over the defendants, including the power to decide whether to enter into an agreement, including the warrant in this case, to negotiate and approve the final deal terms, and to direct the sale of stock. Section 48, Brown was and currently is a controlling person within the meaning of Section 20A of the Act, with the power to cause GM defendants to engage in unlawful conduct described herein. So that was the last of the setup, and now we're going to get into the actual 2 counts that Basil's team is kind of going after the defendants for. So count 1 is rescission pursuant to Section 29B of the Act for violating Section 15A of the Act by effecting the agreements as unregistered dealers. And this count is against the GM defendants. Section 49, plaintiffs repeat, reiterate, re-allege each and every allegation of paragraphs 1 through 48. So basically, to recap, this count is going against every single paragraph that we've been reading through so far. Then section 50, you'll see some green and some pink and bold, and it's bolded for emphasis added. Every contract made in violation of any provision of this chapter or any rule or regulation thereunder shall be void. So basically, they're alleging that they acted unlawfully as unregistered dealers, and that any of those contracts, which would include the SPAs and warrants, those should be voided. Section 51, warrants made or in violation of 15A, prohibits unregistered dealers from using any means of interstate commerce to effect transitions in securities. Section 53, defendants are not registered as dealers with the SEC or with any other regulatory body as required in Section 15A of the Act. Section 56, as a party to the warrant, MTI is in contractual privity with the GM defendants, which means if they were to exercise any of these warrants or anything like that, Mullen Technologies Inc. is actually privy to that information. Section 57, registration requirement is designed to protect the stock issuers and others from unscrupulous or unqualified agents engaged in dealer activities. Accordingly, MTI as an issuer is within the class of persons that the Act was designed to protect. So Mark Basil's talked about this a little bit on some of the space calls. Basically, this law is made to protect the seller of these different contracts, not the buyer or purchaser. So really all of this is in Mullen's favor as far as the way that these different sections and the law is written. Section 58, because GM defendants effected a securities transaction under warrant as unregistered dealers and utilized the means of interstate commerce in connection therewith, the warrant was unlawful when made. So count 2, this is the violation against Brown as a controlling person of the GM as an unregistered dealer. So again, reiterating paragraphs 1 through 58. Going into section 64, Brown knew that the GM defendants were not registered as dealers with the SEC, which is supported by the fact that he was previously registered as a broker for at least 7 securities firms from February '86 through 2001. Therefore, he very well knew of the registration requirements under the Act, but chose to disregard them. Section 66, Brown directly or indirectly induced the acts and conduct that constitute the violations in this action. Section 67, Brown acted as a control person of the defendant within the meaning of 20A Act. And here is what Mark Basil and Mullen Automotive, this is what they are requesting. So prayer for relief. First one, rescinding the warrant pursuant to Section 29B of the Act. Section B, rescissionary damages and such other relief as the court deems just effectuate the voiding of rescission of the warrants. Section 6, awarding plaintiffs their attorney fees and costs associated with this litigation. Section D, awarding such further and additional legal and equitable relief that the court deems just, proper, and in interest of justice. And Mark Basil and Mullen are looking for a jury, or they're demanding a jury, so a trial by jury, on all the issues properly so tried. Mark Basil and actually personally signed this himself, and his firm's listed down there. So thank you all for watching. I know I was pretty long-winded. I appreciate you sticking around. Hopefully this helps break down the lawsuit information a little bit more, and have a great rest of the year. Well, hello and welcome to another video by Financial Earning. Today I want to talk to you a little bit about the expected revenue we should see on Mullen's 10K. As we all know, the 10K did get extended to January 15th. So the first item I want to talk about would be the Mullen Go. So as you can see here, the initial purchase order for the Mullen Go's was valued at $321,000, and it's reflected to be on Mullen's current fiscal quarter reporting, which would have been ending at September 30th. So we should expect this on the 10K. So for the Mullen Go, it's priced out about $10,700 a piece. So that's where the expected revenue at $321,000 comes from. A couple of things I want to talk about on this slide, though. If you look at the image on your left, this came from Newgate Motor Group's Instagram account. And you can see 36 weeks ago, they had this Mullen Go for sale for 17,000 pounds. Well, fast forward to December 30th, 2023, you can see Newgate has on the Mullen Go on their website, and it is priced at 23,500 pounds. So the fact that they are trying to sell these Mullen Go's at a higher price tag leads me to believe that the demand for these Mullen Go's is actually pretty good over there in Ireland. So interesting fact. All right, let's talk a little bit about campus vans. So on the top there, you can see this is from New York Power Authority. This is one of Mullen's PRs. You can see that they completed their campus pilot program and have decided to purchase the initial pilot vehicles. You can see I underline S on vehicles. So let's just assume at a minimum for revenue purposes that they purchased just 2 campus vans. So these campus vans are expected to be sold at expected to have revenue of $14,000 each, and this is based off of Mullen's last 10Q, where they sold the 22 campus vans to Rainier Auto. So $28,000 would be the revenue expected from the New York Power Authority. All right, the second thing is the British Airways. So Mullen did put out an 8K in terms of British Airways. They did have pilot programs for their campus vans at both the LAX and at the Chicago O'Hare International Airports. So again, they say vans plural, so we're gonna go ahead and go off of the least amount of revenue possible, which would be $28,000. So for British Airways, $20,000 is what we're going to expect. And all right, and last but not least, we're going to talk a little bit about the Class 3 trucks. So according to Mullen's PR here, we see that they did deliver the first 10 Class 3 trucks to Rainier Auto, and based off of the total purchase order of 1,000 and that being worth $63 million, we know that each of these trucks are being invoiced for $63,000 a piece. So the 10 trucks, we get you $630,000 for. So just to sum up what I shared on those slides, the expected revenue for Mullen for their 10K fiscal year 23 Q4 estimated it should be $1,007,000. For the full year, estimated revenue should be $1,315,000. So the difference would be the fiscal year 23 Q3, which Mullen's already shared, that revenue was $308,000. and that $308,000 was for the 22 campus vans sold to Randy Marion Auto. All right, so if you enjoyed this video, please consider a like, and if you haven't yet, please subscribe. If you have any other ideas, any other content you'd like to see, if you have any questions about what you saw in this video, please add a comment and let me know. That being said, I hope you guys have a great week. Hello and welcome to another episode of Financial Earning. In today's video, I want to break down Mullen's recent 10K that was just filed yesterday. So let's go ahead and jump right into it. This is going to be a little bit more of a lengthy video, so please bear with me. Hopefully you all get a little bit of benefit from this. If you will, drop some comments, let me know your thoughts on this. So let's jump right into the revenue line. So for fiscal year 23, Mullen had a total vehicle sales of 366,000. Cost of sales was 273,882 for a gross margin of $92,118. We'll break down what exactly was in that revenue on the next slide. So the next section I want to talk about is operating expenses. So just looking at what would be sustained operating expenses, being the G&A and the R&D. Adding those up and then dividing by 12, you get a better idea about what the sustained monthly loss from operations is going to be. Comes out to $24,436,122. So if you look at the next slide as well, you'll get an idea about what Mullen was able to invoice in Q1 of fiscal year 24. So we'll break that down a little bit more. It looks like they're on the right track to be able to sustain loss of operations. I just need to scale up, in my opinion. So again, I just want to share that this video is not for financial advice. It's just for entertainment purposes only. So bear in mind as we break down this 10K. All right, another section I want to talk a little bit about, because a lot of people are talking about how Mullen's 10K had a total loss of a little over $1 billion. But part of that loss had to do a lot with some of these derivative liabilities. I added to the very bottom of this slide exactly what those derivative liabilities incur. And a lot of this has to do with some of their financing costs. So a lot of those SPAs that were utilized during fiscal year 23, that had a negative impact of the overall company's balance sheet. So again, those had mostly to do with the SPAs. That has nothing to do with the actual operational cost to maintain the business. All right, so on this page, we're going to break down the revenue a little bit more. This is on page F61 of the 10K. At the top left, boxed in green, you're going to see $308,000 from one dealer. Why do I think that's important? Because that differentiates the fourth quarter sales or revenue versus the Q3 revenue line item. So we know that Mullen sold 22 campus vans to RMA back in Q3, and I have that broken out here as well. So that was at $308,000 for a gross margin of $59,331. With the 10K information, if we subtract the 10Q, you're going to get the revenue line for the 3 campus vans that were sold, as well as the gross margin line. So you're going to see $56,000 of revenue for the 3 campus vans. Gross margin is going to be $32,787. So looking at those two numbers, you can actually calculate the profit margin. So for the last 3 campus vans, there's a profit margin of 56.53%, whereas when the vehicles were sold to Randy Marion Auto, there was only a profit margin of 19.26%. So it does look like Mullen Automotive performing a direct sale to either New York Power Authority or British Airways would have resulted in a much higher profit margin. All right, so on this slide, I want to break down a little bit more of the revenue line, and I wanted to talk a little bit about one of the notes that Mullen shared, and this is going to help explain why those 10 Class 3 trucks did not show up in the earnings. So let's go ahead and read along at the top there. Have a box in green. It says, in accordance with accounting standards, we recognize revenue from the sale of electric vehicles upon transfer of control to a customer. In general, the control is transferred at the point of delivery to the customer, but certain contracts, RMA contract, to be specific, with our dealers contain a return provision stating that they may return unsold vehicles after 1 year. Since the company does not have sufficient relevant statistics of returns yet, we defer revenue recognition until the vehicles have been sold by such dealer or until there is sufficient evidence to justify a reasonable estimate for consideration to which the company expects to be entitled. Payments from customers are generally expected to be received within 30 days after delivery. So breaking that down a little bit more, that means that Mullen did receive, and you can see this in the table, Mullen did receive the invoiced amount at the end of the fiscal year there. They got the cash. So they got cash received of $1,018,200. But when it comes to recognizing the revenue on their earnings, they're only recognizing the products that was sold to that end customer. So Rainy Marin Auto purchasing those 22 vehicles for their dealership is why the revenue was recognized there. And these 10 trucks, Rainy Marin Auto is going to have to sell to a customer for the revenue to be recognized. However, they're going to be getting that cash. So if you look down at the second table there, and this is for basically quarter one of fiscal year 24. It ended in December 31st. You can see that Mullen 3s, there's a total of 131 of those invoiced. And then for the urban delivery class 1 vans, there was 100 of those invoiced. So altogether, there was $11,907,320. Cash received though, they did not receive cash because that last line says that payments from customers are expected to be received within 30 days after delivery. So Mullen should be receiving that cash in January. However, most likely the earnings for this $11,907,320 will not show up until quarter 2 earnings reports. And that is going to be after these vehicles have been sold to customers. Next thing I want to talk about is the EPA and the CARB emissions certificate of conformity. So one thing that Mullen did share with us, we all know that the Class 1 already received the EPA and the CARB. The Class 3 as well has the EPA. But Mullen shared that the CARB for the Mullen 3 is expected by January 2024. So that's going to be another really good accomplishment to get that certification. There's some additional incentives for buyers, specifically in California, that have that CARB certification. So once that's been approved, speculating here, you should see an increase of demand in the state of California because the end cost of the vehicle to the customer is going to be much less. All right, we're going to go ahead and talk a little bit about the assets and liability. I'm not going to break it down line by line. You can read it through and pause if you'd like. But let's just talk about the boxes in green here. So total assets for fiscal year 23 came out to $421,705,730. Where total liabilities came out at $148,897,620. Why is this important? Because in order to be eligible for an ATVM loan, you have to maintain a 2-to-1 ratio on assets to liability. So as you can see right here, Mullen is very much within that criteria amount. And you can see that if you subtract the two there, Mullen still has a very good amount of assets available in terms of leveraging what they have to potentially get some loans in the near future. Definitely see. All right, another section that's worth noting is cash flow. So you can definitely see at the very top there, net loss was $1,006,658,828. I talked a little bit about this on one of the first slides in terms of loss of total loss, not loss for operations, but the other line item there was a lot of the derivative liabilities. And you can see those listed here. So you've got the reevaluation of derivative liabilities at 116 million and change, and then you've got the initial recognition of derivative liabilities at 513 million and change. So a good chunk of the net loss came again from some of the financing that Mullen took place this past year, and this had to do with the exercise of a lot of those warrants. If you read the first slide there, you can see how they kind of break that down a little bit. One thing that I did want to show though, at the very bottom, box in green, you can actually see the cash and cash equivalents available for the end of 23. So we had an increase from year 22 to 23. Now we're sitting at $155,696,470 remaining there. All right, next thing I want to cover is a pretty big and pretty important piece of information. This has to do with the common stock count as well as the amount of warrants, and we'll talk a little bit about equity compensation plan and what's remaining there. So as of January 12th, 2024, Mullen's common stock total number of shares was at 5,884,693. Quitus, as of the same January 12th, 2024, still holding on to 870,743 warrants. Just wanted to point out that if Equitas was to exercise all of the remaining warrants and add to the common stock amount, we'd still be under the amount for options trading. So still at this time, that has not been turned back on. I want to talk a little bit about the equity compensation plan numbers now. Again, I wanted to point out on August 3rd, 2023 at that shareholder meeting, 52 million shares were approved for this incentive plan. And then as of September 30th, 2023, we got an update of the number of securities remaining. So we have 42,528,111 shares still remaining. And we do know based off of the provisions here that those are immune from the reverse stock split. But Mullen's already placed back 10 million of those shares as this. We know that this took place before the last 1-for-100 split, as this was dated for September 30th. All right, you've made it to the last slide of this video. Before we get started, I just wanted to mention that I will be putting a link to the 10K in the description of this video. So please go ahead and read through the entire 10K. It's rather lengthy, so I just gave a quick overview, my opinion, some of the major things that stood out to me that I'd like to share with you all. But let's talk about this last slide. So risks related to our securities, capital requirements, and financial condition. I'm going to read the bold statements under these couple of items. And then, like I mentioned, if you'd like to read along on your own, please do so. So we have incurred significant losses since inception, and we expect that we will continue to incur losses for the foreseeable future, which makes it difficult to assess our future viability. So this is similar to a forward-looking statement where Mullen is speaking to all new investors or to any investors that have been long on the company for a while now, just giving that word of caution that there is a significant amount of expenses, as we saw from a loss from operations standpoint, as well as where they're at with their revenue. They're going to need to scale up that revenue in the next few months in order to make this a viable operations. So I did list a couple of items. I'll talk about those at the end, some non-dilutive ways to raise capital. But let's go ahead and move on to the next bullet. We will require substantial additional financing to effectuate our business plan, and a failure to obtain this necessary capital when needed on acceptable terms or at all could force us to delay, limit, reduce, or terminate our product development efforts or other operations. So as Mullen mentioned, they have, as of September 30th, a little over 150 million cash on hand. We looked at their loss of operations month over month. So it is going to be important that they're able to identify some additional funding in the near future. So let's go ahead and read through the last section here. We have not paid cash dividends on our common stock in the past and do not expect to pay dividends on our common stock in the future. Any return on investments may be limited to the value of our common stock. So I definitely wanted to update you all on that. I know quite a few investors were interested to see if there was any kind of lawsuit settlement. Would there potentially be any type of dividend? It looks like, according to Mullen here, they would not be providing a dividend to any of the shareholders. Most likely they would take that money and reinvest it back into the operations to, again, scale up that revenue, which would help out with the overall earnings quarter over quarter and help them basically sustain that operations, and then hopefully in the next few months or few years become profitable. So I did want to talk a little bit about that second section that I mentioned. I want to read the third paragraph down. It says, our ability to obtain the necessary financing to carry out our business plan is subject to a number of factors, including general market conditions and investor acceptance of our business plan. These factors may make the timing, amount, terms, and conditions of such financing unattractive or unavailable to us. In particular, recent disruptions in financial markets and volatile economic conditions could affect our ability to raise capital. If we raise additional capital through marketing and distribution arrangements or other collaborations, strategic alliances, or licensing agreements with third parties, we may have to relinquish certain valuable rights to our product, candidates, technologies, future revenue streams, or research programs, or grant licenses on terms that may not be favorable. So basically, if they were to partner with certain groups, or if they took on certain types of licensing to kind of help them in the short term, that would definitely be impacting their long-term revenue. So if similar like Bollinger Motors went ahead and sold 60% of the controlling interest to Mullen Automotive, obviously now Mullen has that controlling interest, so some of Bollinger's revenue now is able to be realized on the 10K, as you saw on one of the previous slides where they kind of went over some of those revenue lines. So just want to put that out there. That's one of the things that they're concerned with. But if we went ahead and read a little bit further, it says if we raise additional capital to continue operations, through public or private equity offerings, the ownership interests of our stockholders will be diluted. And the terms of any new equity securities may have preferential rights over our common stock, and further may restrict our ability to obtain additional financing, even if we needed to continue operations. Further, the ability to fund our needs through equity issuances, warrants, or convertible debt is or may be limited to covenants in certain of our existing or future funding or other agreements. If we raise additional capital through debt financing, we would have increased debt service obligations and may be subject to covenants limiting or restricting our ability to take specific actions, such as incurring additional debt or making capital expenditures, or subject to specified financial ratios, any of which could restrict our ability to develop and commercialize our product candidates or operate as a business. So Mullen is definitely letting everyone know in terms of raising capital, if they do have to take funding in the terms of additional equity issuance or warrants, convertible debt, things of that nature, there is a certain amount of risk involved there, and there is a potential for dilution. So I listed just a couple of ideas, in my opinion, that Mullen could take before going towards the dilutive financing. So first thing, of course, would be to scale production. So as they're receiving this cash from Randy Marin Auto, go ahead and continue to purchase additional materials and continue to increase your assembly numbers or your delivery numbers, month over month, quarter over quarter. The second one will be non-dilutive lending. So this could either be through like an ATVM loan or through another lender. They could potentially do a partnership with a company, and they could offer stock, but they could offer that stock at the current fair market value. So that would be a great way to get a partner to purchase a significant amount of warrants as in a way of investment instead of just selling off those securities. Third thing would be lawsuit settlements or wins. So whether you go through arbitration, mediation, you reach a settlement, or you go to court and get a win in the case. Those are some other opportunities for Mullen to receive, some potential windfall of money that would definitely help them continue on their operations. Fourth item there is grants. So we know that they applied for a grant through the Department of Energy for the battery pack manufacturing. So that'd be a good $50 million increase in their free cash flow that they would be able to use towards the manufacturing of those battery packs. Next one would be partnerships. I talked a little bit about this as part of the non-dilutive lending. So yes, if the partners were to join with Mullen, if they believe in the company's plan and in their future commercial market, then they could potentially partner in terms of financing. And then if they would like to purchase actual commercial vehicles, whether it be vans or trucks, that could be all part of that arrangement made. Then the last one would be deposits on commercial vehicles. So we see a lot of deposits on consumer type vehicles, whether it be the Mullen Mullen 5 or just the Mullen 5 RS. As you saw, look at Tesla as a good example of another EV company that does offer deposits on vehicles. They had the deposits on the Cybertruck, as well as on some of the Model X vehicles in the early years of manufacturing of those. So just another way that Mullen could make some initial revenue or capital, I should call it, and they could use that to help scale operations and help increase that gross margin, which would help them improve on their profitability. So if you like this video and you'd like to see more, please consider liking this and subscribing. And then, like I mentioned earlier on, if you'd like to leave a comment, let me know what you liked about this video, what you didn't like. Let me know any other types of videos on Mullen that you'd like to be covered. And with that said, I hope you guys all have a great rest of the week. Thanks. Hello and welcome to a special video by Financial Earning. On today's video, we're going to break down Mullen's latest 10Q. We're going to go over their earnings, their financials, as well as share count. We're going to talk a little bit about some different lawsuits, settlements, different amounts of debt. We're going to go over quite a bit, so go ahead and stay tuned. But before we do that, I just want to remind everybody that this is not financial advice. This is for entertainment purposes only. Hopefully you guys all enjoy it, and let's go ahead and get started. All right, first we're going to go ahead and look at the left side of the screen here. We're going to go over Mullen's asset column. So looking at cash and cash equivalents, you can see going from September 30 to December 31st, there was a reduction in cash from 155.2 million to 81.5 million. Restricted cash went up. It went from 429,000 to 7,426,000. We'll go into a little bit more details on the restricted cash on another slide. And then inventory went from 16.8 million to 30.7 million. Again, we're going to go over the inventory in a little bit more detail on a future slide. The next thing I want to point out is under the total current assets, which would include property, plant, equipment. I highlighted equipment because, as you can see, the number changed from 82 million to 86.9 million. I believe that was part of the Romeo Power asset acquisition. And then you're going to see right of use assets. And you may be asking yourself, what is right of use assets? And that's actually the assets that are used in the form of any type of lease. So if you're leasing equipment, different things that are considered an asset, you can actually put that into your asset column, and then it has various amounts of depreciation and things of that nature that can be used. Going down into the liability column, I went ahead and just highlighted some of the heaviest hitters as far as changes go. You can see derivative liabilities from September ending was 64.8 million. December ending was at 20.7 million. So less liabilities in terms of derivatives. So that's good progress for Mullen. My hope is that there's no new security purchase agreements for the January through March quarter, and in that case, that section should actually be zeroed out, which would be excellent. Going down under lease liabilities, net of current portion, you can see that the lease liabilities went from 3.5 million to 9.2 million. So again, we do know that there were some additional leasing activities going on this last quarter. Looking at the top right of this screen, you're going to see common stock. As of December 31st, it was at 5.884 million. And that was the amount issued and outstanding. Stockholder equity remained flat at 271.8 million in December versus 272.8 million. And as of February 9th, 2024, I did want to mention this. You can see that the outstanding share count for common shares has increased to 6.552 million compared to that 5.884 million. So there's been a little bit of discussions on this already. What I did want to point out in the last proxy information, we did see that Aquitas Group Holdings still had a total of 870,743 shares of common stock, which could be issuable upon exercise of their warrants. And that calculation was as of January 12th, 2024. So we know that as the share price changes, the quantity of shares that would be exercised is actually going to change as well. So just want to point that out. We haven't received any new information and the new 8K in terms of any warrants being exercised. But in my opinion, after just looking over these numbers, it does appear that Aquitas must have been exercising some additional warrants. All right, on this slide, we're going to go to the left. You're going to look at the operating expenses. We're going to break down the general administrative and then the R&D. So general administrative, actually looking at the December 2022, was sitting at 64.996 million, whereas December 2023, it was only at 43.234 million. And we'll talk a little bit about what changed in the general administrative side of things. And then looking at research and development, we do see an uptick there. Went from 8.622 million in December 2022 to 16.169 million for December 2023. We do know that there was quite a bit of activities this past quarter in terms of homologation, in terms of some of the Mullen 5RS, and some of the other development and researching initiatives, including some of the battery testing and things of that nature. So going into some more expenses, looking at the other income expenses, I want to first point out derivative liability. So these are the expenses in terms of the exercising of shares. So you can see in December 2022, there was a total expense for liabilities of 255.960 million. compared to nothing this past 3 months of December of 2023. So there's been no new security purchase agreements, just as Mullen Automotive has been mentioning to us shareholders. The next section I want to talk about is the loss of derivative liability revaluation. That shrunk. It was 40.781 million back in December 2022. Now it is only 6.728 million in December 2023. A couple of other things, not very large items, but just wanted to point it out. Looks like there was a sale of some of their fixed assets, accounting for $75,990. And then there was a lease termination for $50,000. So those would actually be reduction of those expense lines. And then interest expense. You can see that there was quite a bit of debt back in December 2022, and the interest back then was 2.828 million, whereas as of December 2023, the 3-month ending, it was only $258,023. One more thing I want to show is just the net loss attributable to stockholders. So you can see for the 3 months ending December 31st, 2022, it was at 376 million, whereas December 2023, it was at $61 million. So definitely an improvement in terms of net loss to stockholders. So Mullen is going in the right direction, in my opinion. Going down into net loss per share, this actually complements what I just said. You can see December 2022 ending was at $6,233 net loss per share, whereas this past December 2023, Mullen was only at $15.32 net loss per share. Going to the right-hand side, breaking down cash flow a little bit more, you can look at that net loss column again. We kind of already went over that a little bit. That's that 378 million in December 2022 versus 63.9 million in December 2023. I want to talk about stock-based compensation. So we can see this is actually a very large difference between December 2022 and December 2023. That actually goes into the general administrative bucket in terms of operation expenses. So I did want to point that out. So you can see there that for December 2023, it was only 13.9 million. And then it goes into a little bit more about those derivative liabilities that we already talked about a little bit on the left. The initial recognition of derivative liabilities there as well. And then another section, it's a little bit different, is a gain on conversion of derivative liabilities to common stock. So there was no hits at all in December 2023 for either of those two categories I just mentioned. No hits as well on loss of over-exercise of warrants. As you know, there was some notations in previous filings about one of the lenders having some complaints over exercising warrants, and Mullen actually had to pay them some additional money in terms of shares to compensate for that. And then if you look at loss on extinguishment of debt, there was no loss in December 2023. Going into inventories, again, for the 3 months ending December 31st, it's at 13.9 million. Prepaid other assets actually went down. So from a cash flow standpoint, there was less going out in prepaids. And then net cash used on operating activities, that actually increased. So December 2022 3-month ending was 33.227 million, whereas December 2023, it was at 59.891 million. Cash flows from investing activities. You can see a purchase of equipment was only 726,000 back in 2022, whereas December 2023 is now at 6.865 million. So again, I did mention this a little bit. This has to do with some of the equipment that was purchased in form of asset for Romeo Power, as well as some additional heavy equipment and machinery that we did see at that Fullerton location. So Mullen has been purchasing additional manufacturing equipment for the battery packs, and I'm sure other smaller expenses that will be adding up in terms of getting the assembly line there in the Tunica facility up and running for both the Class 3 and the Class 1s. You can see the Elms asset purchase. Obviously, there's nothing there in terms of cash flows for December 2023. You can see it was a big chunk of December 2022. Let's see, and as far as cash flows from financing activities, again, Mullen has stated there's been no security purchase agreements, and you can actually see that there's a $0 line in terms of any kind of net cash from financing activities. So back in December 2022, Mullen did receive $150 million from lenders, and they had to exchange that in terms of warrants. Going down a little bit further, we're going to look into the change in cash. So we can see that Mullen actually spent $66.757 million in December 2023 for those 3 quarters. And then cash restricted cash, there is that listed there at $7.426 million. Again, we'll go over exactly what that breaks down between those 2 line items in a future slide. But you can see, including the cash restricted cash, it's at $88.939 million for December 2023. All right, as I mentioned, in terms of restricted cash, if you look at the top left, you're going to see the main part of restricted cash was the $7 million escrow that had to be put into an account for the GEM group arbitration activities, and then there's another $429,000 that had already been in restricted cash, and it's still there to date, and that has to do with customer deposits. And then I want to talk a little bit about revenue recognition. So I kind of highlighted a couple of the points there. Company applies a 5-step analysis. So step 1, identify the contract with the customer. Step 2, identify the performance obligations in the contract. Step 3, determine the transaction price. Step 4, allocate the transaction price to performance obligations. And then step 5, recognize revenue when or as the company satisfies performance obligation. Next thing I wanted to point out is revenue from sale of electric vehicles is recognized when the control of the vehicle is transferred to the customer. But that is in general. So the control is typically transferred at point of delivery. However, certain contracts with Mullen, specifically the Randy Marion Auto contract, contains certain provisions that they can return unsold vehicles after 1 year. So because of the verbiage and the clause in those types of contracts, Mullen has deferred revenue recognition until the vehicles have been officially sold by the dealer to the final customer. There is a section, a clause, they talk a little bit about a refund liability recognition. I don't really see that at all in the rest of the 10Q. If anyone did, please drop a comment. Let me know exactly where I need to be looking in terms of that. But I just want to kind of show that. So that is a way that Mullen is able to kind of show some revenue in terms of a refund liability. It's not going to be the same as being put into the revenue column, but it's something to talk about. And then we'll look a little bit into the inventories, and you can kind of see some of these vehicles that have actually been delivered to the dealer. However, they haven't been sold. A little bit. You have inventory. If you look at the top left, we're going to break that down a little bit. So if you look at total inventory, you can see December 31st, 2023 sitting at $30.719 million compared to September 2023 of only $16.807 million. So almost double the inventory kind of increase there over the 3 months. Just let's break that down a little bit further. So work in process, you can see is about $1 million added, or an increase for these 3 months. Raw materials had about a $5 million increase, and then finished goods delivered to dealer for distribution. So these would be the vehicles that are actually sitting at RMA's lots that haven't officially been sold, so they're not recognized as revenue, but they are recognized as part of the inventory number. So that's almost $8 million worth of inventory there. So what's interesting and what I like about this breakdown is we can kind of get a better understanding of how much material is currently sitting at Mullen Automotive's production facility there, or assembly facility there in Tunica. And between the work in process, which means the frames are actually on the assembly lines, they're getting different either battery packs installed on them or different wirings, different lights are getting installed. That's that $4 million. And then raw materials. So these would be the frames or the chassis and cab if you will, and maybe some battery packs, different things that have came from or imported in from overseas, but they haven't actually started the assembly process yet. So this is actually showing that potentially Mullen has about $30.7 million that they could be recognizing in terms of revenue. And another thing I did want to point out, though, is this is not including any type of profit that they would be charging to Randy Marion, which would actually increase this. So, you can speculate that they could receive about 20% profit. So you could look at increasing the total inventory to figure out revenue by about 20% more. So that puts it at about $36 million there in potential revenue. Looking down at the bottom left, kind of talk a little bit about Mullen's debt. One really good tidbit of information that I was able to kind of put together. So as of December 31st, 2023, there was a total debt of $7.6 million. However, the company actually ended up repaying by the end of January $5 million of that debt. So that real estate note is completely paid for, which is actually really good news, which means they own the facility scot-free. Then the remaining debt total is only $2.7 million. So a company that has two fully capable facilities as well as some significant assets there only has $2.7 million in debt. So and that would be kind of like liability debt. So pretty excited about that. In my opinion, they've done a great job of utilizing their cash to kind of reduce that debt, so they're not wasting money on a lot of interest. Let's talk a little bit about that promissory note. Everyone noticed that 8K that came out in December, specifically December 18th. It was a $50 million promissory note, which provided Mullen with $32 million of capital to be able to use towards operating expenses. So that left a $18 million discount. So a lot of people are scratching their heads wondering, why would Mullen sign up for an $18 million discounted loan? It seemed like it was very toxic at the time. Mullen finally came out now and published it in this 10Q exactly what the breakdown is for that. So let's go ahead and read this middle section here. It says that the $18 million original issue discount was considered a settlement cost related to a dispute over financings that occurred during the fiscal year end September 30th, 2023. So the $18 million has been accrued as of September 30th, 2023, and it's included in the accrued expenses and other liabilities in the December 31st, 2023 and December 30th, 2023. So when the debt is issued, the $18 million will be reclassified to note payable. And again, I just want to show that this note incurs a 10% annual interest, which escalates to 18% on default, and it matures 3 months post issuance. So a lot of information I just kind of unpacked there. Glad to see that we got a little bit more information in terms of this. One other thing that we will see in a future slide is the fact that as of February 12th, this still has not actually been exercised. So that 3-month window for paying interest and that default hasn't even begun to date. Through that section and talk a little bit about those dreaded warrants. So if you read through that section, you're going to see preferred D warrants with a fair value of $20,704,136 still remained outstanding as of December 31st, 2023. So we know that Aquitas actually still was holding on to close to 70,000 warrants, which could be exercisable for up to 800, I think it was 870,000 shares, and that was based off of the proxy material that Mullen provided us. As of December 31st, though, you can see that those warrants have a fair value of $20.7 million. Looking a little bit more on the balance sheet there, as of December 31st, 2023, the remaining warrants in terms of common shares conversion was sitting at $20.7 million. Talking a lot of stock-based compensation. So a lot of people have been talking a lot about this. One thing I did want to point out, looking at the 3 months ending December of 2023, total share-based compensation was only $13.9 million, and this includes everyone from directors, officers, employees, consultants, and then also some liability classified consultants. So just a various amount. This 13.9 was not going all to the CEO, as some may like to say. You can actually see the breakdown here. And it's actually a lot less on share-based compensation compared to the previous year, ending December 30th of 2022, or December 31st. Looking at the largest delta there, you're going to see a compensation to employees actually is reduced significantly. And what that reduction is mostly in terms of was that share-based compensation. So it was a big drop between those two years for the 3 months. Complaint stuck it around. We have one more slide after this one, but I know everyone's been interested into what types of lawsuit information was going to be getting shared on the 10Q, so I went ahead and broke that down here. So let's start at the top left. The first section there is more about the initial DBI and drawbridge investment complaint with Mullen. If you want to, you can pause and kind of read that. I'm going to go down to the highlighted section, which is mostly relative for this quarter. So on December 5th, 2023, as part of the settlement, Drawbridge withdrew its appeal to Mullen's motion to dismiss, which was granted by the court on August 25th. With prejudice, which means they cannot go back and change their mind on this. So this specific, $100 million money damages and the due to the $25 million worth of Series E stocks, all of that stuff is being nullified, and the settlement actually finished up December 31st. The company basically is accruing $1.95 million to complete the satisfaction of the claim. So in my mind, this is actually a very good settlement for Mullen. If you look at what Drawbridge was going after Mullen for, Mullen was successful in to settle this outside of trial or anything like that, and yeah, everything's been dismissed with prejudice. The second one I want to talk about is the GEM claim. This has to do with the arbitration demand. So we know that Mullen had to put $7 million into an interest-bearing account and became restricted cash. On January 24th, 2024, arbitrator actually ordered Mullen to deposit $24.114 million into an escrow account before March 9th of 2024. So Mullen immediately filed an action in the United States District Court, Central District of California, contesting the arbitrator's decision, as well as filed an action in the United States District Court for the Southern District of New York, seeking to void GEM's group agreement made that it violates Securities Act, because GEM Group is not a registered FINRA dealer. So this is one of the lawsuits that we are made aware of, that Mark Basil and his team are currently reviewing and seeking to basically nullify this entire GEM claim and get that arbitration money back in Mullen's asset column as free cash. Looking down at the bottom left, this has to do with Mullen Technologies Incorporated. So this is all done as of January 16th, 2024. Mullen Automotive actually received a cash payment in full settlement of $2.7 million. So MTI has paid Mullen for that transition service. So now there is no longer any type of ties financially with MTI. Going to the top right, I already talked a little bit about the promissory note. I did highlight it again. If you want to pause it and read through it all, you can. We already talked about the $32 million that Mullen will be receiving for operating expenses. They have the $18 million discount that has to do with the settlement due to some of the security purchase disputes with Isusa. But you can see that as of February 12th, 2024, the loan has not been received. And as I mentioned before, the interest and the actual loan itself, the default term, which is 3 months, doesn't start until the actual loan has been received and executed. So we'll have to see exactly when Mullen decides to go ahead and transact this loan. They will need to be doing some form of transaction on this because of the settlement. This is basically part of that $18 million they're going to have to pay. Point out that on the 10Q, Mullen did not include any of the deliveries that were originally on the 8K today for delivering to Rainy Marion Auto. I went ahead and highlighted the invoice amount that has not been received as cash yet. So you can see from the September 30th quarter, there's from the class 3 trucks, the 10 trucks, there's $652,000 that has been invoiced but no cash. I'm sorry, no revenue recognized. And then looking at the Mullen Class 3 trucks for the December 31st quarter end and the Class 1 vans, the 100 vans, overall for invoiced amount is 11.9 million. And again, no cash has been received as of December 31st and no revenue recognized. So there's going to be a significant amount of revenue coming up in the next quarter. In my opinion, it should pose Mullen to see at least $30 million. So I'm pretty excited for this next quarter. I feel like this 10Q had some good information. It does appear to show that additional warrants were exercised. This was not dilution, Dave, as some of these bears like to say. This has to do with the warrants that we already know about. Those are getting exercised. So the share count is still sitting under the options trading amount of 7 million. And as you can see here, there's quite a bit of revenue that is going to be getting rolled into the next quarter. And as you may also be aware, I have had conversations with Brad from Rainy Marion Auto, and they're currently working on getting those financing agreements set up to be able to have their end users or end customers go ahead and take out loans to pay for some of these vehicles. And they're also working on an allied floor plan that's going to help them provide Mullen with cash within 30 days of getting these vehicles delivered. So if you like this in-depth detail breakdown of the 10Q, please consider again liking and subscribing to this video. If you have any other comments, if you think I missed anything that has significant importance, you want me to make another video about the information, please drop a comment and let me know. And with that said, hope you have a great rest of the week. Well, hello and welcome to another episode by Financial Learning. On today's episode, we're going to be breaking down Mullen Automotive's latest 10Q filing. We're going through all of the financials as well as going over some of their litigations and also some of their financing options. So without further ado, let's get right into it. So the first thing we're going to talk about is going to be share count, followed by Mullen's revenue and their cost of operations. The top table there you can see in the green and white, it's going to list Mullen's share count. You can see I have the date of December 31st, 2023, as well as March 31st, 2024. That is going to be the difference in the two earnings. So that's going to be the 3-month period. As well, if you see there May 9th, 2024, that date is important because that's the date that was shared on this specific 10Q, and it gives us one of the most recent share count updates. So looking across all the different lines, you're going to notice that shares from warrants remaining, they've actually stayed pretty stagnant. This specific lender, which would be Aquitas, still hasn't actually exercised any of these warrants. They're still holding as of March 31st. You can see the preferred Series D as well as the preferred Series C and A. They've all stayed stagnant as well. There's been no changes there. What you will see changes of are going to be the common share count. That common share count is listed at that top line, and back on December 31st, it was 5.884 million. And then you'll notice on March 31st, it is 7.974 million. So it did have a quarterly increase of 2,089,751 shares. And then if you are looking at the 10Q and you want to find the latest one as of the filing, or as of the, I should call the preparation of the 10Q, you will find 11,412,596. So that is the total share count to date for Mullen Automotive. We'll talk a little bit about that share count and where some of those shares may have been coming from. As you can see, the warrants actually haven't played any type of factor in that first quarter. So moving into the second section, you're going to notice change in quarter. I have this highlighted in green and red. So the green would be positive. So if you're looking at revenue, profit, and margin percent, anything that's green would be a plus sign when you're looking at the two different quarters. And then if you're looking at the cost, so the general administrative, the research and development, and just overall cost of operations, anything in red means that there was an increase from quarter to quarter. So first thing I want to point out is revenue. Mullen did go ahead and book one of those Class 1 vans as revenue for the quarter ending March 31st, and that was for $33,335. You can see the profit for that one van was $19,895, which gave that profit percent about 59.7%. So that's a pretty good amount of profit per vehicle, and we're not sure exactly where this van was sold. We know that there was a poppy florist dealer in the state of California that did purchase a van, but from my recollection, that van was purchased in the current quarter, which would be April through June. So where this one van was purchased, not quite sure, but it is a very interesting profit margin. And if you consider Mullen does have the FTZ now officially, any vehicles that are sold outside of the US are going to have an even larger profit margin than the vehicles that are sold in the States. So with only one single data point, it's tough to say how accurate this profit amount is, but it is good to see that each of these vehicles so far to date that have been sold, we've seen Canvas vans sold, and now we've seen this Class 1 van sold. All of them have had significant profit margins. So going down into the actual cost of operations, there's the two buckets that Mullen breaks it into, general administrative and research and development. You can see that the general administrative did have an increase in cost for the March 31st quarter. It had an increase of additional $4,669,640. And we're going to break that down a little bit further on another slide. So sit tight. Let's go ahead and finish this up. You can see from a research and development, there was an increase as well, an additional $7,853,559. So for a total cost of operations, there was an increase of $12,523,199. So some of you may be asking, I thought Mullen was planning on cutting back their costs. Well, I went ahead and added their PR into this specific slide, and you can see the PR was dated for April 8th. So that date is outside of this specific quarter for this earnings. So if Mullen starts to cut the cost as is stated in the PR, you can see they're planning as from a cost of operations of cutting $69 million over the course of those 12 months. So that should definitely help cut back on the costs for Mullen operations moving forward. We do know that they're already talking about combining some of those facilities there in Troy, Michigan, with one of the other facilities there to try to help cut back on some of those leasing costs. And they have had quite a few different individuals come in and out in terms of their sales team. So I'll be interested to see what Mullen's able to achieve in this next quarter in terms of reduction of cost of operations. All right, so on this slide, I've got quite a few different things to talk about. The first of which is going to be a little bit of more information in terms of the revenue and the cost of operations. There are some other costs as well, but when you roll all those together, you can actually get an idea of what the actual net loss was for Mullen Automotive. One thing that they do subtract from their net loss is this non-controlling interest item. You can see for the quarter ending of March 31st, there was a non-controlling interest line item of $38,930,288. So that actually got reduced. And then if you took the weighted average of shares for that quarter and you use that in the calculation, that's what Mullen used in order to figure out what the net loss per share was. So Mullen had a net loss per share of $19.39. That was actually an increase in cost compared to the previous earnings in December. Now, one thing that I thought would be interesting again has to do with this less impairment section that I have here in parentheses. You'll see that I did use this as well when I looked over the cost of operations. The less impairment has to do with the reduction for the value of Bollinger, as well as in the Elms assets. So Mullen did do a write-off or a one-time reduction in value for those two specific line items, and that impairment amount was added to this earnings report. So if you were to take that impairment away, because like I said, that's a one-time thing, you actually get a much better earnings per share. You get a net loss per share of only $3.95, which is actually an improvement over the previous quarter. So I think that's interesting as well. I used the same weighted average per share. I just removed the impairment costs whenever I took that into account and I did this calculation. So if you'd like to check my math, please go ahead and do so. I have no problem at all with that. One last thing I want to talk about before I get into the asset and liability column is going to be this stockholder equity additional paid-in capital. So this has to do with the amount of money that the shareholders have been contributing in terms of paying into capital for Mullen Automotive to continue to operate as they begin to produce their product and be able to start selling that product for revenue, and then of course for a profit amount that is going to help them bridge that gap. But for the time being, the cumulative amount as of March 31st was $2,151,067,184. That is only an increase, a changing quarter of $16,960,705. So overall, that is the amount of additional money that the shareholders ended up contributing for this paid-in capital amount. The reason why that number was not as large as previous quarters was because there was no warrants really exercised in this past quarter. So what you did have is some additional shares that were paid in as part of this employee incentive plan. We'll talk a little bit about that on a future slide, as well as some additional shares that were paid for some liability or some litigations. And we'll talk about that in a future slide. So if you go down past that green bar, we're going to start looking at Mullen's assets. Again, anything that is in red is a negative, it's a reduction in assets. Anything in green is a gain on assets. And then when you look at liabilities, it's going to be the inverse of that. So anything that is increasing in terms of liabilities is going to be red because that's not good for the company. Anything that is getting reduced in terms of liabilities is going to be green, and that is going to be a benefit for the company. So looking into this, let's start with cash and cash equivalents. You can see that there was a reduction of cash and cash equivalents. Mullen used $59,134,175 in this last quarter. So that left Mullen at the end of March with $22,378,089. So we'll talk a little bit about Mullen's financial situation near the very end of this video, but let's go ahead and just continue down some of these other lines. So you can see from an inventory standpoint, this is actually a green line. Mullen did increase their inventory by another $2,242,195. So they've been adding additional product, which we know that is their vehicles, or potentially some of their work in progress, or some of their raw materials from imports. So they netted an additional $2.2 million worth of inventory. So that is a good value to their asset column. In terms of their intangible assets, this has to do with some of their patents or other types of IP. What I did notice is Mullen decided to write off some of the Elms IP, some of the Elms patent type of intangible asset line this specific quarter. That had to do with, I believe they said something to the effect of timing in the market. So just kind of wanted to point that out there. So that is a negative on their asset line by $74,757,344. So again, if you are looking for what exactly pulled that asset line down so much, besides obviously the cash burn, was this intangible asset line. And then another one would be this goodwill. So goodwill is the amount that Mullen wrote off at the end of December, and that was that Bollinger and Elms. If you remember, I talked about the less impairment. I think it's interesting that Mullen wrote off the goodwill at the end of December, but when it comes to an impairment, they have that impairment listed in this March 31st earnings report. So again, that's that goodwill asset that has been removed. So that is why it is red there. And that explains why the impairment is in this column. There was 28 million of goodwill in the end of December, which has now been written off for the end of March. Looking at their total assets, so this is just the sum up of everything. There may be some lines that I did not add to this specific spreadsheet, but the totals still jive with the overall earnings. You'll see assets were reduced by $167,056,771. Getting into the liabilities column. First thing is going to be accounts payable. This one actually increased, so they added to their amount that they owe by $7,240,041. So that is the amount they may owe in terms of whether it be on their lease, whether that be a specific note, specific consultants, whatever the cause that may be. We'll look a little bit into that in a future slide, but that is for that column of accounts payable. Looking at the next column, that's going to be the accrued expenses and other current liabilities. So what else was added to the liability bucket? Again, there was an additional $5,025,575. That's the delta that was added to that liability column. The third one down, this is the derivative liabilities remaining. So this has to do with the liabilities in terms of exercising of shares, has to do with a little bit about warrants, as well as if there's any shares that are owed. Mullen actually taking care of those shares and getting those to the individuals, whether it be consultants, whether it be employees, getting those shares kind of distributed amongst. So you can see that at the end of December, Mullen still had a liability of $20,714,620. But they actually reduced that down to 5.1 million. So they reduced their liability in that category by $15,590,133. So that was a good thing they were able to do this past earnings quarter, was reduce that derivative liability, which again is tied to the share count. You'll see the next section down there. This is the lease liability. So the current portion, meaning what is actually due now. This is not the roll up of the 12 months. You can see that they had a reduction in terms of lease liabilities by $995,000. And you'll see notes payable. You can see this is their debt. Mullen did talk about this in their last earnings. However, they paid the note in January, which means it takes effect in this specific earnings report. So you can see they went from 7.6 million down to 2.7 million. They actually paid off in full the facility there in Tunica, Mississippi. So now that building is owned outright by Mullen Automotive. Again, that is a positive in terms of their liability. They reduced that liability from this notes payable by $4.9 million for the quarter end. So total liabilities, there was there was a decrease in total liabilities of $12,657,317. So that is a good reduction for Mullen Automotive. They were paying some of these bills, or if you will, some of these loans off. There were some increases. I already talked about those, but overall they actually netted a benefit by reducing that liability column. And then one other line item I did want to talk about, I thought it was very interesting. Mullen has a spot where they talk about purchase of equipment. So if you recall, there was a purchase of equipment in the quarter ending December, about $6.8 million worth, and this could have been some of the Fullerton location getting some equipment. Potentially they may have paid for some of the Romeo Power assets in the last quarter. I know that the announcement was in September, but potentially that could have rolled into the month of October when they made their payment. So just keep that in mind. But what I found was interesting is Mullen, between the months of January and March, they purchased additional $5.6 million worth of equipment. So they are scaling up. Don't know exactly which location this equipment is for, whether it be at the Fullerton location. We did see some of their machinery there, or if they added any equipment to the Tunica, Mississippi facility, or maybe at the Troy location. We don't know, but I thought it was interesting to show that Mullen did increase. So they are adding to their investment of $5.6 million. All right, and I broke down some of those categories a little bit further based on what Mullen shared. I grabbed some snippets from the previous earnings report and just kind of put it line by line right next to the current one. So if you look on the left, it's going to be Mullen's current earnings report, and if you look on the right, it's going to be Mullen's previous earnings report in December. So prepaid expenses, you can see overall there was an increase in prepaids. So Mullen has been adding some money into their prepaids. What exactly was getting added? Let's take a closer look. You can see from a prepaid services, there's an additional $5 million, approximately $5 million added to prepaid services. If you look at prepaid inventory, there is an additional about $3 million worth of prepaid inventory. So again, is this additional equipment, either equipment, or is this additional vehicles, raw material that Mullen has already prepaid for and could be getting shipped in the near future? Looking into a few of these other line items, you can see from a prepaid trade show, this one was actually reduced quite a bit. You know, Mullen didn't have their strikingly different tour going on, so there was no kind of shows to be paying for in terms of this quarter ending. But you can see back in December, there was a total prepaid trade show of $3.7 million, whereas for this quarter end, prepaid trade was only $83,000. So overall, just want to kind of share a little bit about their prepaids and how that breaks down. And at the bottom, we're going to break down the general and administrative costs. I did find some very interesting sections in here. I did want to break those down a little bit, so let's get right into it. So first thing I want to show is going to be, you'll see the 3 months end March 31st and then the 6 month end March 31st. So if you think about it, if you take the 6 month end values in that 2024 column and you subtract from the 3 month end 2024 column, that delta is going to be what they paid for the previous quarter. So it's a little funny math. If you want to do that on the fly with me, go ahead. But you can see from a professional fee standpoint, it's about even. If you figure $30.6 million for 6 months, these past 3 months, they paid $14.4 million. So if you were to double this specific 3 month quarter, it will be about $28.8 million. Again, so if you did look at that, they spent a little bit more on professional fees in the December quarter end, but not too much. Wanted to really just flag a couple of the higher amounts. So if you did look at that settlements and penalties, you're going to see that is increased. So for the 6 months, there was only $8.6 million total for settlements and penalties, whereas just in the past 3 months, there was $6.7 million in settlements and penalties, which means that for the December month, there was only about $2 million that were paid out for the settlement and penalties category. Looking a little bit further down, you're going to see compensation to employees. At first, I kind of scratched my head and thought, was Mullen reducing their staffing? But I did recall that in their previous earnings reports, they did talk about making a shift into their ERP system. So what I believe they are now doing is their direct team members are going to be logging their hours against cost of goods sold. So as these vehicles begin to be sold and that revenue is realized, there's also going to be the cost of goods sold realized as well. So I believe that is why the compensation to employees has been drastically reduced, as well as the employee benefit column or line item. If you look at those two, you're going to see that for the 6 months it was $9.2 million, but for these past 3 months only $1.9 million for compensation. So that would leave about $7.3 million or so would have been utilized for the 3 months ending in December for compensation against 1.9 million for the March ending quarter. So as I mentioned, I believe that that offset is going towards now cost of goods sold, and we'll be able to notice that hopefully in this next earnings report coming out here at the end of what do we have here? It'll be the end of June, but we'll probably be getting it about mid-August. So hopefully on that mid-August earnings report, we will see some of those costs of goods sold from these employees getting added to those lines, and we'll see that because there should be some significant revenue based off of some of Mullen's latest PRs that they've been sharing. So going down a little bit further, just looking at a couple other line items, you will see the lease line item. So for the 6 months, Mullen had paid a total of $972,000 for leasing, whereas for just these past 3 months, they spent $774,000. So their lease category did go up in the general administrative category just for these past 3 months. And then there's an other line item. I'm not sure exactly what's on the other line item, but you'll see there what was 4.6 million for 6 months. Just this past month was 3.7. So that means the other line item was about 1 million for the December ending quarter, and it's 3.7 million for this quarter end. So overall, if you just looked at the general administrative, it would be 91.1 million for the 6 months versus 47.9 million for just those 3 months. So there was a slight increase overall for the general administrative category, and you did see that on one of the previous slides if you were just rolling everything up onto that. But I did want to break down a little bit some of the general administrative and kind of see how this is all falling into place. And we will see how Mullen is planning on reducing some of that cost. As they did mention, $69 million coming off of the cost of operations. So it's either got to come from the R&D section or it's got to come from this general and administrative category. So it will be interesting to see those 12 months, how that $69 million is going to be spread out and reduced for savings. All right, and one other thing I did talk a little bit about was that derivative liability. I wanted to just break down this liability to issue stock category. You can see here on March 31st, 2024, this is the end of quarter. There was a current liability in amount of $7.8 million. And some non-current liability in the amount of $500,000. So what all that comes from, you'll see that there is a CEO incentive award that has a current liability of $2.6 million out of that 7.8, and then you're going to see some additional shares to be issued to certain investors upon those warrants of being exercised, and that is that 876,192 shares. So those are those warrants that Equitas still owns, and those have a derivative liability of $3.7 million. So again, just kind of wanted to break that down a little bit. And then there's some for contracts and consultants that comes out at 1.3 million. And then overall other parties, another 0.2 million. So just kind of wanted to share that with you a little bit and show you how that derivative liability, how this liability issue stock is broken out. And if you do recall, David Mishry has deferred recognizing or receiving some of the stock-based compensation that you've seen in some of these milestone awards. So I think that's interesting as well. It does say something about the CEO that he understands that the company doesn't want to be burdened with having to procure and release those additional shares to him, whereas they need to be able to use some of these shares as cash, as capital, to be able to keep the business going. So I did want to say that I do think that is a positive thing that David has decided to, for the time being, defer receiving of that share-based compensation. So a couple things I do want to show as well down here. I already talked about it, but just want to kind of show it to you in another way. This has to do with the machinery and equipment. You can see that in the December ending quarter, it was about 31 million, and in the March ending quarter, it was at 34 million. So that's that 3 million increase on machinery and equipment. You'll also see a small increase in buildings, so a little bit more in terms of value in the asset column for buildings. So overall, though, there was a small decrease in property, plant, and equipment. So you may be asking, where is this decrease coming from? And it is in depreciation. So if you look at the overall total cost of assets, excluding the impairment, there's actually $5 million getting added in for this end of quarter, March. But if you do look at the accumulated depreciation, that has that increase almost about 9 million. So that's why it does look like the property, plant, and equipment is being reduced in value in terms of the asset line. So like I said on the last slide, I did talk a little bit about the CEO, David Mishry, not taking some of those stock-based compensation shares. And you'll see here that for the 3 months ending March 31st, this is going to be the first two columns here. You'll see one for 24, one for 23, and then the right-hand side, that's going to be the 6 months ending March 31st. And again, we're talking about 24 versus 23. So looking at the 3 months, you'll see that there is a negative $6.24 million that David Mishry has not received. He's deferred that award for the time being. So that is still sitting there as a balance. That is a liability that the company has to eventually provide him those shares. But for the time being, he is deferring those. You will see that from a share-based compensation to employees and directors, there was an increase of $3,487 or $487,105 for the 3 months ending in March versus that 5.4 for the 6 months. So there were additional shares being provided for these first 3 months. Looking at from a consultant standpoint, there was a reduction in consultants in terms of compensation, whereas the 6 months was 1.2 million. This 3 month ending is only 206,000, so about $1 million versus 200,000, comparing the last 2 quarters. And then the last section is going to be the share-based compensation to consultants. Again, this is $4.2 million for the quarter ending March. Comparatively to the 6 months of 14.9 million. So that would actually mean there'd be about 10.5 or so, maybe 10.6, 10.7 million dollars were provided to consultants in the December ending quarter, whereas in the March ending quarter, it was only about 4.2 million. So overall, if you recall, as I mentioned, the CEO has deferred his shares. That means that overall there was only $1.7 million in terms of share-based compensation as an expense versus in the 6 month period being 15.6. So a pretty significant reduction in stock-based compensation for all around between employees, consultants, and the CEO. The first one, this has to do with that $5 million promissory note that Mullen did pay off. If you look at the last sentence for this first section, it says in January 2024, the loan was paid by the company in full and the collateral was released. So this has to do with the property at 1 Green Tech Drive, Tunica, Mississippi. So this is their Tunica plant. Mullen Automotive outright owns this plant. They already outright own the Mishawaka plant. So as of the end of March, they now have 2 fully owned facilities, therefore producing vehicles. The bottom section, this was that terrible promissory note that everyone was concerned about. There's a lot of talk, a lot of drama behind it. It was a $50 million note. 32 million was going to be used towards the cost of operations, and there was an $18 million basically credit. So Mullen would be receiving 32 million, but they would have to pay back 50. And we did find out through some of the filings, I believe it was in Mullen's 10Q, for the December ending quarter, we did find out that that 18 million had to do with a settlement between Mullen and Isusa. But Mullen did let all of us know, all of us shareholders know. I'm going to go ahead and read this last sentence here. At this bottom, it says, the funds contemplated by the debt agreement have not been received, and on May 7th, 2024, the debt agreement has been terminated. So Mullen did not have to borrow 32 and pay back 50. This specific note was outright terminated. If some of you do know, I did speak about this many months ago, back in December when this thing was announced. I said, well, what if Mullen decides not to take this note? And lo and behold, as of May 7th, this thing is terminated. So now let's go ahead and get into some of the litigation items and what other line items Mullen will be paying. All right, so if I can get you to look at the bottom left of your screen, there's a table here. This table is going to kind of reflect the next few slides that we talk about in terms of some of the litigation. And that's because there are certain settlements that Mullen is acknowledging that they will be paying out. So if you do look, again, this is the March 31st quarter end, you're going to see provision for settlement expenses and legal fees. So Mullen has earmarked away $34,865,306 for settlement expenses and legal fees. The rest of those are just taxes, accrued payroll, accrued interest, refund liability, and some other accrued interest. So overall, or accrued expenses. Overall, this is one of the expense line items. I put it here instead of in one of the previous slides just because this $34.8 million has to do with some settlement expenses and legal fees that Mullen plans to pay out in this quarter. So the first thing is this TOA trading. So there was a litigation in terms of a finder's fee with TOA and Mullen Technologies. When Mullen and NetElement were doing the reverse merger, this specific company wanted a finder's fee, and according to this specific section of the earnings, it does say that the company has accrued expected settlement expense as of March 31st, 2024. So Mullen will be taking care of this litigation now. All of the pre and post judgment, all of the awards and everything like that for this case has been kind of closed out now. So Mullen will be basically paying off this litigation. We don't know what it is. I did go through this specific lawsuit. I can't find the exact value, but it would be part of this $34.8 million. The next section has to do with drawbridge settlement, and it does say that this has to do with Drawbridge did want some additional shares, and Mullen was kind of going back and forth with Drawbridge on that, and Mullen has settled to pay $1.95 million, and this is as of March 31st, 2024. So this is going to basically take care of this claim completely. So both the TOA trading litigation and this Drawbridge settlement are now closed out. There are a few more on the next couple of slides, but just remember this $34.8 million as we continue along. In terms of some more litigation, there was this Margaret Schwab versus Mullen Automotive Inc. And this had to do with one of the shareholders or stockholders. They did file a class action lawsuit against Mullen Automotive, and this had to do with their PR, some of their announcements. As you all know, if you have been a long-term holder or long-term interest in Mullen Automotive, they were planning on releasing their Mullen 5, actually back in maybe 2021, 2022 time period. Unfortunately, that vehicle did not get launched back then. So some of the shareholders, they looked at that PR along with a few other PRs that were forward-looking, but there were some items within those PRs that had some leg to stand on alone. So according to this specific section of the earnings report, at the very bottom here, you can see that the company has accrued expected settlement expense as of March 31st, 2024. So again, that $34.8 million, part of that is going to go into this specific litigation, this specific lawsuit. Looking at the bottom left, this has to do with a debt agreement for a convertible note. Actually, this is the section that I talked about. This is that $18 million for Isusa. So if you look through here, it says near the bottom here, it says the 18 million settlement cost has been accrued as of September 30th, 2023, and is included as accrued expenses and other liabilities at the March 31st, 2024. So again, this $18 million, instead of opening up a $50 million note, as Mullen was going to do back in December, Mullen is going to go ahead and take care of this $18 million. The bottom right, this has to do with Silverback Capital. This is another liabilities settlement agreement. This has to do with overall liability for vendor up to $4.6 million. Again, this at the very bottom says the agreement, enforceable upon court approval, aims to fully settle the specified liabilities without cash outflow. So it looks like Mullen will be settling this $4.6 million using shares. So instead of having to burn through additional cash, they will be utilizing some share capital. So if you're looking at what Mullen's trading at now, it's about $4.60 or so. So you're looking at about 1 million or so shares will be provided to Silverback Capital to help close out this specific settlement agreement. All right, so now that we've gotten some of the litigation out of the way, let's talk about some good news for the company. They have been able to secure some financing. The first financing I want to talk about is going to be this $50 million note with warrants attached. This is as of May 14th. They entered into a security purchase agreement with specific investors for some senior secured convertible notes as well as some warrants. The initial amount to be converted is going to be 12.5 million, and that is the value for the note, but the investors will be getting 13.2 million because the 12.5 million has an inverse discount, so the lender will be receiving 13.2, and they will be getting that 13.2 in terms of shares, and then after this first 12.5, there is an additional 37.5. Again, if you invert that discount, the lenders will be able to exercise an additional 39.5 million worth of common shares, and they will receive some warrants on top of that. So let's go ahead and read through what all the requirements are for this specific financing to take place. First off, the company has to have sufficient authorized shares for the common stock, up to 250% of the current common stock. If you do know, Mullen has up to 5 billion shares that they could be utilizing, and if you look as of May 9th, there was only about 11 something million of shares being used. So there's definitely enough shares available for this specific financing. So number two, the common stock has to have an average trading volume of 3 million shares within the last 10 trading days for this SPA. The third section, there has to be a registration statement covering the common stock, talking about the conversion of the notes and the exercise of warrants have to be declared effective. Number four, the company has obtained stockholder approval for the issuance of the notes and warrants in compliance with the NASDAQ rule. And I believe the NASDAQ rule is anything greater than 20% requires a shareholder vote. So as long as the allotted shares stay under 20%, this specific secured note will continue to process. Section V, the company is in compliance with the continued listing standards of the NASDAQ capital market. So we know that Mullen did get fully reinstated in the NASDAQ. They did get that annual meeting taken care of, as well as they have been trading above $1. So again, with all those sections in the green, this specific SPA can go ahead and begin. And again, there is another caveat as well. It says each investor may terminate their obligation to purchase additional amounts under the SPA agreement if the funding conditions as well as closing conditions have not occurred for a period of 3 months or longer. So if this SPA doesn't actually get kicked off, if they're not utilizing it within 3 months, these investors can go ahead and cancel the funding of this note. And then in terms of the notes, so these convertible notes for the company, if they choose for some reason not to provide them with shares, if they didn't want to pay for them out of cash, they do accrue an interest of 15% on top of the 5% original issue discount. And this does mature for 4 months. So basically, the longer that this SPA remains open, the higher the value will be in terms of what will be converted for shares. So if you remember, the 12.5 has that 5% discount, gets the 13.2. So there is that additional 15%. So that 13.2 can grow in value each month as they continue to hold and not exercise this SPA. We want to go ahead and talk about how they are converted. So there's a couple different ways, and it's going to be the lower of these ways. So the first one is going to be the lower of $5.49. So no matter what the share price for Mullen's shares are, if let's say for some reason it hits $10 a share, these notes will still get converted at $5.49. So that is the ceiling for this note conversion. The second caveat, which would be a potential lower than $5.49, would be 95% for the closing sale price for this common stock on the date for this company's registration statement on this S1. So we haven't seen an S1 specifically for this $50 million note with warrants attached. There was a different proposed S1. I'm not really going to talk about that in this earnings report, but if that S1 does become an actual S1 and there is a shareholder vote needed for that, we'll talk about that in a future video. So again, if that S1 is declared effective, if a S1 tied to these notes becomes effective, then it could be the ceiling would be 95% for the lowest daily volume weighted average. I'm sorry, that's the third one. The second one would be 95% of the closing sale price of the execution or the declaration of that S1. Section 3 or number 3, 95% of the lowest daily volume weighted average for the past 5 trading days for the conversion date. So let's say they want to convert on a Friday, they will have the lowest price for the previous 5 trading days. So the previous Friday, Monday through Thursday, the lowest of those days, and it would be 95% of that low value. That would be what they would be able to convert those, purchase those shares for. And again, those dollars are going back into the company. Number 4 has to do with, as part of number 3. So in the event that the share value does drop significantly, it does have a floor. So the floor is at $1.16 per share. So that is the bare minimum that Mullen is willing to sell these shares to the investors for. So if you are concerned with additional shares being purchased under $1, which could impact their NASDAQ listing, that is not the case. There is specific contingencies written in that protects that value by keeping the floor at $1.16. All right, in terms of warrants that are attached to this promissory note or this SPA note, it has to do with the holder will receive 5 years to exercise these warrants, and they are exercisable for 200% of the shares of common stock for these specific notes. So for instance, let's make it easy. If the investor purchases 1 share of common stock, they are entitled to 2 warrants. So that is the conversion rate. So it's for every 1 share purchase, the investors are going to be getting 2 warrants. So keep that in mind. And those warrants are exercisable at a price equal to 105% of the closing sale price of the common stock on the execution date. So whatever date the warrants are exercised by these lenders, they're going to be able to get them at 105% of the closing price for that day. Again, these are all exercisable on a cashless basis, and it has to do a little bit with that Black-Scholes value. Again, if the company meets the funding conditions and the VWAP for each trading day during the 10 trading day period immediately preceding the date on which the company elects to exercise, this option is 250% above the exercise price. The company will have the right to require the investors to exercise the warrants for cash. So that is interesting to say the least, because, for instance, if the company ends up finishing the rest of the promissory note and the volume weighted average price for 10 trading days after the company closing out the conditions are met, the company can actually exercise these warrants. They'll have the right to require the investors to exercise the warrants for cash up to 250%. So that is interesting. So Mullen can actually purchase these warrants back from the investors if they so choose to do. So in the event Mullen has some significant improvement and their revenue is just exploding, and now the share price is worth a lot more than current state, and it's worth more of the fair value for the company, they may choose to go ahead and just outright purchase these warrants from the investors instead of allowing them to exercise the warrants at that much higher price. So that's another interesting thing that Mullen has written into this SPA. All right, the second paragraph, don't want to read too much into this, just basically says the company's agreed to file a registration statement for this SPA. The third paragraph down talks a little bit about the company will be restricted from issuing additional securities to other parties for a specific period of time. And so that kind of protects this investor from any other lenders coming in, getting additional securities, and then being able to kind of exercise warrants and kind of impact their current investment that they have here with Mullen in terms of their shares. The last section here talks a little bit about the notes and warrants. Again, they can be converted by an individual holder. However, they cannot own more than 9.9% of the common stock. This is something that has been in previous SPAs, but now it's even more important because of the shareholder rights agreement that was put in place. And this was back, I believe it was on, might have been May 13th. But for that specific date, there was two circumstances or two triggering events. There was a flip-in event and I believe a flip-out event. Flip-in event would basically happen if an individual obtained more than 9.9% of common stock. Again, Mullen Automotive would have to approve that from happening, and there was a price or a fee that they could charge that individual for owning more than that amount of common shares. And then that flip-in event would allow all of the common shareholders, except for this one specific investor, to purchase shares at a discount, as well as being able to obtain, if they choose, that junior A1 preferred, double A1 preferred share. So just wanted to kind of put that into perspective. This information was written in as well. And then it does say that that the notes and warrants may not exceed 19.9% for the total numbers of common stock. Again, that's because if that was to happen in that event, there would have to be stockholder approval as per the NASDAQ listing rule there 5635D. So just kind of wanted to put that all into perspective. And in the last section there, pursuant this SPA, investors may exercise within 1 year an additional investment right under the identical terms. So interesting, if this investor does choose, they could go ahead and take out another $50 million promissory note under these same terms within this year. And again, this is just money that Mullen will be able to utilize towards operations. This is helping them stay afloat while they start to make sales and scale up their operations. All right, thanks so much for sticking around. This is the last slide before the outro. Just wanted to share a little bit about the payment for the securities in this SPA. It says on the closing date for the initial closing, buyer shall pay its pro rata portion of an aggregate of $12.5 million. That's the initial price. And at a later date, on the second closing date, the buyer will pay their pro rata portion of $37.5 million. That's the second purchase price. And again, they are going to get the 12.5 for a pro rata portion. They're going to actually receive 13.1 million in value of common stock that they have the choice to purchase with, as well as those warrants that I mentioned. And then for the second, this 37.5, they're going to be able to get, and this is that 5% discount, they're going to be able to get 39.4 million worth of common stock, as well as the warrants. There, outside of the 50 million, there was an additional 100 million in financing through senior secured notes and warrants. Again, I'm not going to go through as much detail as I just did on the 50, but you will see on the right-hand side, this buyer, this is Azusa Group Holdings, this is Michael Wachs, this is Justin Davis Rice, Jim Fallon, Jess Mogul, Michael Friedlander, Phil Bannister, Matthew Krieger, and Mario Silva. So those are all the buyers for this specific financing agreement. So this $100 million worth of financing agreement, this is going to be set up into 8 tranches. Each tranche is going to be 12.5 million, and this is going to be paid over the course of the next 13 months. These investors are going to get $4 million up front as a commitment fee in terms of stock. So they're going to get $4 million worth of stock right away. And then outside of that, you can see some of the terms here. I'm not going to read through all of them. There's a lot here. And then again, I would encourage you, if you haven't already, you can actually click on some of the exhibits at the end of the 10Q, and you can read in detail some additional information in terms of the security purchase agreements, some more about the terms, some more about just the overall details. But I did want to just share just high level what Mullen had shared in at the bottom of their 10Q there. Outside of this, this does set Mullen up for $150 million worth of financing. And then I did want to mention at the very bottom here, I did add another paragraph, another snippet. It does say, if the company does not secure adequate funding to fulfill its current liabilities, it anticipates seeking bankruptcy protection in various jurisdictions within 30 days of publishing these financial statements. So again, that is if they cannot get this 50 million note with warrants, or this $100 million financing arrangements kind of off the ground running within the next 30 days, they will be looking at bankruptcy protection. However, this has probably been in the works for quite some time. That is why Mullen did cancel that $50 million promissory note with Azusa. They now have this other terms in terms of security purchase agreement for financing. So again, near the very bottom, it does say, as part of its cost-cutting measures, as I mentioned, there was $69 million in cost of operations they're looking to reduce. The company plans to further reduce its workforce and streamline operations. So I believe they did mention that Troy, Michigan location. They were looking at doing some merger with either their California base or their Michigan base to kind of reduce the overall building leasing that they have currently. And then they may look at some redundancies in terms of workforce if they have some engineers that are covering, let's say, the Mullen 5, and then the same engineers are covering, these Class 1 cargo vans and the Class 3 trucks. They may take a look at all of those individuals and see where it makes sense to kind of merge departments. Again, let's continue reading through here. It does say, including downsizing with physical locations, as I mentioned with the leasing. However, there is no guarantee that the company will be able to restructure its debts and or secure necessary financing on favorable terms. So it will be interesting to see what Mullen does come through. If any of you have been noticing at all, Mullen did have an additional 8K come out on Friday evening, and it went over another SPA. So Mullen is actively getting financing to take them through 2024 and through some, if not all, of 2025. So we'll have to see how Mullen does in terms of financing and what Mullen is able to capitalize on with these funds in short term. So thank you all so much for watching. I hope you really enjoyed it. If you did, please consider giving this video a like. If you haven't, please subscribe to the channel. Leave me a comment. Let me know your thoughts on this earnings report. Leave me a comment and let me know what other types of content you'd like to hear me cover. Again, I am not a representative of Mullen Automotive. I am not paid by Mullen. I am just an investor who is still very much bullish on the company. I do hope that you enjoy this video. This, of course, is not financial advice. This is information only. And I hope you all have a great rest of your days, and I'll see you on the next one. Well, hello, and welcome to another episode of Financial Earning. On today's episode, we're going to be talking about what I decided to do with my Mullen Automotive shares, as well as my current outlook on the company. We're going to go over the 10Q, just a quick brief update with what we saw on that earnings report. And then I want to share with you all what I intend to do moving forward. So without further ado, let's get right into it. And really quick, wanted to mention that this is not financial advice. This is just my own personal opinion and personal decision on what I decided to do, again, with my money. I went ahead and did sell my Mullen Automotive shares back on July 5th. And I'll share with you all exactly how I came to that conclusion on the next few slides. And then I'll share with you what I decided to do with the remaining cash and what I plan to do moving forward. All right, so first thing I think you all should see is definitely this Mullen chart. This is taking it back to kind of mid-April. You can see we did have that jump in share price where it did go all the way up to about $7.50. You know, looking back, hindsight, this is how all traders are. I really wish I would have scaled back my position at that point in time, but I decided to hold my position. There was a lot of activities going on. There was a lot of PR that was breaking. And I was just hopeful, again, as a trader, I was hopeful to see that share price continue to rise. However, there was some additional information that broke about mid-May that basically, in my opinion, kind of started this downward trend. So again, this is the Mullen share price chart, and you can see where I sold about July 5th. It was around $2.28, $2.29. And since then, it's reached a low. It closed the last trading day at just 27 cents. All right, so looking at the DEF 14A that was filed sometime around, I believe, June 10th, you can see that these warrants are being calculated in terms of how many shares could be provided, you know, based off of exercise of these warrants, but the date was May 14th. So one thing I wanted to point out is between May 14th and June 10th, the share price did decrease. And with that, there are certain Black-Scholes calculations that are used in order to calculate an accurate number of shares that a company or an investor would get based off of the warrants that they have on hand. So again, I want to go over a couple of these. So Isusa Holdings, superscript 3. So looking at section 3, I've highlighted here. Again, if they were to exercise their warrants as of May 14th, they would be able to add an additional share count of 3,463,000. So what's important to note is that at this time, the cap is still at 9.9%, and this shareholder proposal, this vote, was to increase the percent of ownership from 9.9 to 19.99%. So again, that would allow these investors to exercise additional warrants and hold on to additional shares. So again, this hadn't been approved yet. The vote for that was going to be in mid-July, but just wanted to kind of share what potentially was to come. And if you look at JADR Capital, superscript 4 down at section 4, you can see that as of May 14th, if they were to exercise those warrants, they would receive an additional 1,073,000 shares. So again, those shares potentially would create dilution if those warrants were exercised. Again, as I mentioned, they are capped at 9.9. That doesn't mean they can't exercise those warrants. They would just have to sell their additional shares if they reached that 9.9%. Before they could continue to exercise more and more warrants. All right, so we're getting closer. This filing was actually on July 3rd. So just 2 days prior to me selling the majority of my shares. And this was the prospectus that was attached to the S1 filing. This was for Isusa for that ELOC. So that $150 million for 75 million shares. Again, at the point of this specific filing, the share count, the common share count had already increased to 16,031,470. So there was already dilution going on, either in terms of the warrants being exercised by some of these different companies or from some of these employee incentive program where they were able to get additional shares. So why I still continue to stay in until that July 5th date, in my mind, I thought if Mullen was able to basically sell this offering to Isusa for this $150 million, my thought was that, with a market cap as low as maybe 30 million at that time, that, Mullen Automotive may have had something up their sleeve and they were going to announce something in the days to come that would kind of justify an ELOC, this equity line of credit of up to $150 million. Again, with the market cap dwindling and with these warrants that would continue to get exercised, causing additional dilution and basically taking from the market cap, my assumption was that we would be getting some form of news. So on July 5th, this was on a Friday, just before the shareholder vote, which was occurring that following week to increase the number of shares for Isusa and other companies up to that 19.99%. I decided I'd go ahead and sell my shares. I was also, just to be completely transparent with you all, there were days where I would be very anxious going into the opening bell. I didn't know if there was going to be any good news breaking or, exactly what the share price was going to do. So, having a lot of your portfolio in a company can basically cause a significant amount of anxiety to an investor. So again, just wanted to be transparent with you all and just share that information with you. So I decided to go ahead and sell the majority of the shares. And I got to tell you, I did feel I did feel a little bit of relief afterwards. And then, of course, the weeks to come, you saw the share price continue to go down each day, each week. Continued to feel better and better about my decision. And as we know now, it's down to around 27 cents. So I saved myself about a factor of 9 already by selling when I did. So again, I went ahead and saved that money, and I intend on sharing with you all my current status and then what I plan to do moving forward. But again, just want to share with you all, this was basically why I decided to go ahead and sell. It was based off of no news coming out, no significant news that would justify, the amount of funds that these investors were willing to put in, compared to Mullen's market cap. So again, I'm not saying that, news couldn't break. What I'm saying is that in my mind, my opinion is, if Mullen already had significant news to share with the investors, I feel that that would have already happened. They would have already wanted that volume to get increased. And I feel that that would have potentially helped justify them diluting into the volume run up. But unfortunately, that did not happen. There was some, of course, news that continued to flow, but in my opinion, it wasn't news that really justified, this large of an offering, this large of an equity line of credit. All right, so if you look here, this is from Mullen's latest 10Q. If you're an investor in Mullen Automotive, you would have probably already reviewed a significant amount of this, but just want to go ahead and share with you all. First thing is going to be at the top left here. This is their vehicles. So vehicles that were invoiced and cash received. So you can see there they had some Mullen 3s and some of these urban delivery vehicles, which are the Mullen Class 1 EV cargo vans. They did invoice a total of 15 vehicles, but as far as cash being received, what's on the books for revenue, they received revenue for what looks like just 2 of their Mullen Class 1 EV cargo vans for $65,000. So if you look at the bottom left, I want to focus on the operating expenses. So you can see their general administrative was sitting at $47,477,000. Their R&D was at $14,292,000. So how did that compare to the previous earnings report? You can see there that their general administrative was still sitting at $47,903,000, and their R&D was higher at $24,023,000. But what I wanted to talk about was the fact that the G&A, general administrative, really hadn't moved much quarter to quarter. And if you do recall, they did have some PR out at the beginning of the year where they stated that they would be doing some significant cost savings to be able to help kind of cut back on some of the spending. If you think about it, $65,000 in revenue is not really going to put much of a dent into their operating expenses. So, the assumption is, as they're trying to scale up and increase their revenue and potential profit margin, quarter over quarter, that you'd start to see them tighten their belt around the general administrative. So I still don't see that happening. They did say by the end of the year that there would be some significant amount of savings from a cost down standpoint. But as of right now, I'm not seeing much. It does make sense the R&D went down. They did kind of take a step back from their consumer vehicles just to focus on the commercial vehicles. So there's a little bit of a decrease there. But I am curious, in these past 3 months, what was spent on R&D? What was that $14,292,000 that Mullen did spend in this last quarter? Again, was it crash testing? It would be nice to get an update if that was the case. Was there any additional battery testing going on? Again, would be nice to hear about that kind of information. These are the types of things that investors want to know about when there's a significant amount of dollars being spent on an operating expense line, such as shown here on their earnings report. So again, as I mentioned, on social media, these are some of the things that I still don't see current state Mullen making very good progress in. So in my opinion, before making any future Mullen content, any future Mullen videos, I like to see that revenue get up into the millions. So without that, I don't see the company continue to progress. So I will be looking at them still, as someone who was an investor, a significant investor in the company, in my opinion, and where I'd like to be able to see them in the next couple of earnings reports. Again, they have very little cash on hand. Their market cap is very small, so unless they're able to get a breakout quarter in terms of sales, any large deals, I don't see much viability left. Again, this is just my opinion for the company. So it's going to be very crucial, very, very crucial that this specific quarter that we're in now, that they're able to get some significant sales. And I'm not talking about 5 to 10 vehicles here. I'm talking they're going to need vehicle sales in the hundreds. So let's stay tuned. Let's all watch. Again, I'll be watching for the most part from the sidelines and see how Mullen is able to finish out this quarter. So what have I been doing since July 5th? I'll show you right here. I have been basically screening multiple stocks, looking for some opportunity to kind of make back some of the losses that I had with my Mullen investment. I've been using FinViz here. It's a great stock screener. It's free. And I'll be sharing exactly what type of screening presets do I use, and go over all that in future videos, but just wanted to quickly just show you what I plan on doing moving forward. I will be screening stocks. I will be investing in 10, 15, sometimes 20 companies at once, and I'll be sharing, potentially top 5, top 10 companies that I have on my watch list or that I happen to be invested in. So just wanted to share that information with you all. I hope that you would enjoy some videos like this. I will not have a Discord or anything like that. I plan on just sharing my experience, sharing my trades right here with you all on YouTube. So hope you all enjoy the content that's to come. All right, so how have I been doing since that July 5th sell? And you can see here, this date range is from July 8th to August 18th. And if you all recall, and I'm sure you do, there was a little bit of a downward push in the majority of the stocks back at the beginning of August that lasted for almost a solid week. So that did put a little bit of a dampener into my plan, but I was able to still continue to push forward, and I'm still continuing to see some successful trades as I continue on. I'm looking forward to being able to share that all with you, week over week, but just wanted to kind of share with you all of the close positions. This is how I did over the course of that time. And you can see I do have a red one there at the bottom. Wish I would have held that one a little bit longer. That one actually did have a nice little bounce. It's trading around $10 a share now. But anyway, this is the total of the companies that I was investing in. And for the most part, my plan moving forward is to look for companies that have a profitable, looking for that P&E to be in the positive. Again, that's just my opinion. Some people like, some of the speculative trades. Also look at some of the forward P&E as well. I think that all is very good information to have. And then another thing to look at is look at your debt over equity. I think that's really important as well. If you are trading companies that have more equity than they do debt, then there's less risk of them needing those detrimental SPAs that we see so many different companies utilizing, these days to be able to generate revenue. So if you can find yourself a profitable company with less than 1 on the debt over equity, then you're going to be in good shape, in my opinion. Of course, this is still not financial advice, but just want to share with you all. You can see here that my goal is to make about 5% on each one of my trades and just continue to turn over, that capital as I make these purchases and these sales. All right, folks, and that wraps up for me. I hope you all enjoyed this video. If you did, please consider giving this video a like. Subscribe to the channel if you haven't already. Drop a comment. Let me know your thoughts on this video. Let me know your thoughts on my decision to sell my Mullen Automotive shares. And then if you wouldn't mind, leave me a comment. Let me know your thoughts on my intention of creating additional content, non-Mullen Automotive content. I'm going to be looking to screen the stocks out there looking for investment opportunities. I'll be sharing those in these YouTube videos moving forward. As you can see, I've been doing it now for about a month, and I've really enjoyed doing it so far. and I'm looking forward to sharing more updates with you all as I continue down that path. Again, just wanted to point out that I am not and was never a paid representative for Mullen Automotive. I received no compensation whatsoever from the company. I was just an investor in the company. I do still have a very small position in Mullen Automotive, but I decided to take the majority of those funds out and continue down this future path that I'm sharing with you all. And I hope you all really enjoyed this update, and I can't wait to share with you all on the future videos. And with that said, hope you all have a great rest of the week, and I'll see you on the next one.